What's going on, investors? What better way to celebrate the end of Q2 than to do a ranking of the most talked about Wall Street Bets meme stocks? In typical Wall Street Bets fashion, my ranking justification will come from mostly hyped up best case analysis scenarios, memories from my childhood, and using phrases like YOLO, diamond hands, and to the moon, as well as using rocket ship emojis whenever I have nothing better to say. If you love this madness, all I ask is you hit that like button and subscribe to the channel. Now please excuse my horrible cropping of these images, this site was not very user friendly for my screen grabs. Let's start off with Blackberry, ticker symbol BB. Now that's only one letter off from BBW, and those are always really fun, so we're already off to a great start. Now Blackberry has lost money each of the past 2 years. They have a downside forecast of negative 20% from its share price today, and they have a strong sell rating from all of the analysts who cover it, according to TipRanks. But all of this is irrelevant, because if Blackberry doesn't go to the moon will go to Blackberry. We're gonna have to put Blackberry in the C class for now, but if we get any more strong sell ratings from analysts, I'll be sure to move it on up. Now, did somebody say AMC? No, actually, I think they said AMD, the semiconductor company from California. Now, AMD has had impressive revenue growth in recent years. They have a decent 15% upside potential from analysts, and they also have a moderate buy rating. AMD continues to take away market share from Intel in the server market because Intel can't get anything produced in time these days. AMD is also partnering with Google to launch a new line of virtual machines for the Google Cloud. Now, I'm afraid that a cloud is all that AMD can take to the moon these days, as their 1800% return in the last 5 years has likely already depleted all use of their rocket chips. For the strong legacy AMD leaves behind, we're gonna have to put them in the A tier. Did somebody say AMC? Yes, this time we really are referring to the largest movie theater company in the world. They have nearly 1,000 theaters across the United States and Europe. While some might say that the suits are the biggest short sellers of this company, local governments deserve plenty of blame too. AMC Theaters was basically forced to shut down their businesses indefinitely, but congregating at the local Walmart with no capacity requirements, that was for some reason totally okay, cause you know, science. When AMC raised millions of dollars after issuing more shares thanks to the Wall Street Bets community, they actually went out of their way to warn investors that there is significant risk in investing in this company. Analysts will say it's because of the stock dilution, poor earnings, and the massive debt that will plague them for years to come, but no, it's actually because of their costly mistake long before C19. You see, when I was 17 years old, I applied to my local AMC to become an usher, but they told me that I wasn't usher material, and I didn't get the job that day. I didn't get the job of cleaning up people's spilled popcorn. Now, AMC clearly messed up when they failed to capitalize on their opportunity to have me work for them, because I obviously would have risen up the ranks to become CEO by now, and I would have prevented all of AMC's current troubles. For that blunder that they committed long ago, we're gonna have to put them in the C category. Moving on to the OG that really put Wall Street Bets on the map, and that is the good old GameStop stock. Now, GameStop shorting caused hedge fund Melvin Capital to lose billions of dollars, or 50% of its assets under management. The diamond hands of Wall Street Bets investors propped up GameStop stock's price enough for the company to raise over $1.5 billion in a share offering. Their chairman, Ryan Cohen, has been busy grabbing executives from Amazon and Google in efforts to transform GameStop's business. They got the money, they got the talent, they got the free advertising, they have a loyal fan base, let's see what they can do with it. Plus it's Roaring Kitty approved, so for all those reasons, it's going in the A tier. This next stock is literally going to space, as Virgin Galactic just gained FAA approval to fly passengers into space. Richard Branson, their CEO, and Jeff Bezos, they have nothing better to do than to see who can conquer space first. I guess once you can literally own anything on one planet, it's time to go on and colonize the next. If you, like the rest of us, are still confused about what this company's business model is, well, they don't really have one. They're hoping to one day build space vehicles for everyone, but currently tickets cost $250,000 a pop to go out in space right now. So unless our next stimulus check is for $250,000, the target audience for this is very exclusive. Now, Space has actually had 0 revenues for 4 quarters. Yes, it really does look odd looking at an income statement and seeing zeros across the board. This company is bleeding cash left and right, but hey, none of that matters these days. Just have more share offerings to raise cash and dilute shareholder holdings. There might be a sign of life somewhere out there in space, but it's nowhere to be seen in ticker symbol space. For that, I'm giving this an F rating. Next, we have a stock that kept getting pumped up by finance YouTubers. Who are we kidding? All these stocks have been getting pumped up. But the next stock is Workhorse Group, which specializes in the manufacturing of electric-powered delivery and utility vehicles. Now, all of these charlatans, they kept promoting Workhorse, possibly getting a USPS contract worth $500 million. And when it came time to pick out whose manufacturing talents would be chosen, it was not Workhorse, and the stock went plummeting. And those financial charlatan YouTubers went MIA for a while, but they're back. But that won't save Workhorse from getting an F rating. Let's bring up some positivity to this chart after back-to-back Fs. Now, I was delighted to see that I had actually owned a meme stock before it became a meme. SoFi Financial is one of the largest holdings in my portfolio, so you know my opinion is totally not biased, as I place it in the S tier for superior. Now check out the prior videos I've already done on SoFi, because I projected that they would go to the moon well before Wall Street Bets projected they would. Now don't be fooled with SoFi being on this list. They actually have a lot of potential, being the one-stop shop for anything loan and refinancing related. They have rampant user growth, and they are actually really close to being a profitable company, despite being on the younger side. They also have this thing called Galileo, which allows them to see their moon landing project a lot easier. But in all seriousness, Galileo is going to be similar to the Amazon Web Services of fintech. They provide APIs, which are application programming interfaces, which is the software that allows applications to talk to each other. Now, despite the stock price not exactly being reflective of the true value of SoFi just yet, I do anticipate it will grow as SoFi continues to mature as a public company. Now, let's summarize our rankings for our Collect Cash podcast viewers. In the F category for hot garbage, we have Workhorse and Virgin Galactic. In the C category, we have Blackberry and AMC. In the B column, there is no lucky participants. In the A column, we have AMD and GameStop stock. And S for superior, we have SoFi. That's all the time we have today, folks. I'm sure there's a ton of stocks that we missed. If this is something you want to see more of, let me know in the comments below. Now, I try to use a blend of satire mixed with actual information. Hopefully it was fun and informative. As always, these videos take a lot of time for me to make. Please consider touching that like button and subscribing. It really does help out a small-time channel like this. And always remember to buy, stash, and collect cash.